Welcome to our 18th episode of Bay Area Housing Market Town Hall. Let's look at the big picture in terms of the whole market in the United States. So we've been providing these home price forecasts for 2021 from different organizations, and Mortgage Bankers Association. They were on our webinar last month, and they had a very aggressive projections, which is 10.3% appreciation for 2021, while CoreLogic is only 3.3. But if you average out all these different places where the projections is about 5.9 on the average for all these forecasts. And it's interesting if you compare pre 2008, like the mortgage recession, because a lot of people are saying like, oh my gosh, our market has been really blowing up. It's been appreciating way too fast. But if you're comparing 2002 to 2005, the average annual appreciation is about 10.3%, while 2017 to 2020, the average annual appreciation is about 6.3%. So if you look at that way, it doesn't feel like it has gone up as much as the pre-mortgage crisis. Please do subscribe to our channel and like our video, as we have spent quite a bit of time to put together all the research and share with you exactly what's going on during this past 30 days. And here again is some of the numbers that from other organizations. This is the actual final appreciation numbers for 2020. So if you look at Federal Housing Finance Agency, we recorded a 10.8% increase or appreciation. In CoreLogic, it recorded 9.2%, and S&P Case-Shiller recorded 10.4% appreciation for 2020. So for those people who have bought homes in the beginning of 2020, you're probably very happy right now, because in just 1 year you had gained quite a bit of equity. And if you're looking into different region, now you can look at the whole United States from the Pacific to the central to all the way to the east, and you see that mostly all double digit, besides the west north central area, where they are single digit 9.7% and 8.6%, but the mountain area doing really, really well. And also I'm really actually surprised over here, the New England area, they have recorded a pretty high number of change in price as well. And I put together this list today. It's a really long list at over 400 American cities, but I picked out just the California cities to see how we're ranking and the appreciation since 1991 1Q. As you see, Stockton actually made the top list at 155.83. But if you look, just keep going down. This is in order. We have Modesto, Fresno, Sacramento, Riverside, Madera, Vallejo, Yuba City, San Luis Obispo, Chico, Los Angeles, Anaheim, Irvine area, and then Santa Cruz, San Diego, of course, San Francisco, and San Jose. San Jose, the Silicon Valley area, actually has the most appreciation compared to all the other cities in California since 1991. I thought that was interesting. I'm sure those people who have bought in the 90s in the San Jose area or anywhere here, you'll see a huge appreciation of your property. I'm talking about this is almost 3 times more. Now, another question about is the foreclosures. We have clients asking us, how do you find foreclosures? So let me show you the foreclosure filings for California. We have pre-foreclosures dropped 4.9% last month, and compared to prior year, dropped 78.8%. And then it went to auction, it actually dropped 73.1%. And actual bank owned, it dropped quite a bit, but obviously we have this moratorium where they're not really foreclosing anyone right now. But I think the pre-foreclosures, this is a really good indication to show that unfortunately, we just don't, when our clients ask us how to find foreclosures, we always have to answer them is that there isn't really a lot of foreclosures, especially here in our market right now. And that's why I wanted to show this chart to show you, prove to you that the foreclosure filings are really it's not really high. And so we are not really foreseeing that we're going to have a lot of foreclosure activity. Now, mortgage, I don't know if you guys have noticed, the mortgage rates had gone up, and the interest rate, they said like the 30 years fixed rate experienced its largest single week increase in almost a year, reaching the highest level since July 2020. We've been talking about this all year in all my monthly housing market updates. And we did talk about, like, starting 2Q of 2021, we should start seeing some increase in the mortgage rate. And sure enough, it did increase. So if you look at the rate had been going down, but starting January, it has gone up slightly. And in March, actually, we just hit 3.02 for Freddie Mac 30 years fixed. We do our webinar and also housing market update every second Wednesday of the month. And we do live webinar from 4 to 5 p.m. Pacific Standard Time. So I hope you can join us. And this is mortgage rate projections as this month. You see some adjustment from Fannie Mae. They have adjusted their projections, basically adding another 10 basis point on all their projections. So which make the average of 4 projections go up slightly as well. So now instead of 3.17, it became 3.22% for 2022 1Q. And they're expecting, again, here's the 2021 2Q is at about 2.95% on average of these 4 projections. And we have received that, latest stimulus package. And this is good news, as the stimulus package, the $1.9 trillion relief package, is actually projected to help propel the U.S. economy to its fastest annual growth in nearly 4 decades and reduce poverty and revive inflation. I am quite excited about this stimulus package that's going to help a lot of people, but I think we still have to take precaution on how the relief package is being used and being distributed. So I think this is another topic that we can talk for a long time about how this is going to affect our economy. But let's leave it for another webinar. We can dive deeper onto this topic. So real quick, on commercial real estate market, I just want to let you know that San Jose, especially downtown San Jose, hasn't slowed down in developments. These are all the developments, especially office buildings in the downtown San Jose area. And if you go over there right now, I mean, the Google Village is still going on. And then there are a lot of Class A office buildings are being developed in the downtown San Jose area. So we did share, news about that. They believe San Jose is going to be the one leading our post-COVID recovery. And if you look at the commercial real estate market, don't get me wrong, office building is still really slow. You could tell that a lot of people are still, they are leasing smaller spaces. They don't need as much of an office spaces right now. But these developments is not happening. It's not going to complete within this year, but they are still moving forward into building because they have such strong confidence of the recovery of downtown San Jose, especially because the Google Village is continuing their development. And also the Diridon station, they have the phase 2 of the BART station, which will come to the Diridon Caltrain station and extend all the way to downtown San Jose and Santa Clara University. So this is the next 10 years developments that's going to happen, and a lot of things is going to change in downtown San Jose. Lastly is our multifamily update. As of March 1st to March 6th, they collected 80.4% of rent payment. And February, in the full month, they did collect 93.5%. If you compare to last year, it is slightly lower, but it's not too much lower. It's just slightly. So the outlook is better than we thought. And if you were here last month listening to Jeff Burns, who talked about multifamily financing, he did say that initially a lot of us were expecting to see a lot of pre-foreclosures or forbearance on multifamily mortgages, but we really haven't seen a huge rise on that. And then we continue to make offers for our investors on multifamily side, and it's still the prices from the sellers are very aggressive. They are not really coming down too much. So buyers are realizing that, I don't think we can wait any longer, because they really want to take advantage of the low interest rate. So we do have a lot of investors are still very aggressive and making offers on multifamily. So hopefully this have given you good sense of what the market is doing right now. And I would like to go ahead and introduce back our speaker, Tim Tucholsky. As I mentioned, he is a CPA and a CSIM, and he has over 40 years of accounting experience. When you finish, click onto the second video that we do, where we invited Tim Tucholsky, who is a CPA, to give you some strategies and tricks on how to handle the Prop 19. And I look forward to seeing you on our next episode.
Subscribe, people.